Can you get a home if you've just started a new job? Well, today we're going to dive exactly into that.
Christy was in this exact situation. She'd moved up from Brisbane to Cairns, had just about started a new job, and at the same time found the perfect home. She'd signed a contract, was ready to apply for a bank, and the bank said, whoa, you've just started a new job, there's no way you can get a new loan, you've got to wait 3 months. That's when she hit us up. And we came up with an awesome solution to help her get her home, which we're going to cover in this video. Nathan, it starts us from the very first question. If you're in Christy's situation, can I get a home loan if I've just started a new job?
The answer is absolutely yes. You've got to be careful because not all banks are the same here. There are some lenders that need to see you 6 months in the role at a minimum with maybe 2 years industry experience. There's others that flat out will refuse you no matter the industry experience that you have if you haven't been in the role for at least 3 months. However, luckily, there are lenders that will say yes in this situation. There's a couple of things they want to see. They want to make sure the role is full-time or part-time. So if you're a casual contractor, if you're on an ABN, if you're working casually, usually the banks won't accept that. The key is you've got to be full-time or part-time. One pay slip, you're good as gold. In some situations, they'll even take the employment contract. So you've got a lot of options there to get into the market if you've just started a new role. Jaden, if you've been in the role for a month, is that something a lot of lenders will take into account, or what does that sort of look like?
Yeah, so again, it's horses for courses. So some banks have issues if you're on probation, if you just started a new job, if you've just graduated and you didn't have industry experience. But there are a bunch that are completely fine. They say one pay slip, that's all I need to see. And even some cases, like with Christy, they just need to see the employment contract and then get a pay slip before settlement, which is crazy. You can actually get your loan approved quicker.
And the other thing is, some lenders have two policies. They've got one if you've got a 20% deposit and one if you have less than a 20% deposit. So in some circumstances, they'll say, if you have a 20% deposit, we'll take one pay slip. If you don't have a 20% deposit, well, we need to see you there in at least 6 months in the role or have a minimum of 12 months industry experience.
Yeah, and so what about when you're changing jobs? What if I've been doing an IT, professional industry programmer, that sort of thing, been offered a new job? What if it's casual? How does that work if I'm going straight from one job to another?
Casual is definitely quite challenging. A lot of the times the banks are worried when you go casual that you might work 40 hours this week and then no hours next week. By virtue of nature, the fact that it's casual, they can really literally give you any hours.
Yeah, I had a situation like this recently with Jarvis. He'd gone to a couple of different roles. As an IT contractor and got 12-month rolling contracts. And it's a hard one where you constantly change your roles every 12 months, but it's just a nature of the industry. We found an awesome solution with one of the banks that can look at his last 6 months salary credits. So even though he'd been in the role for 1 month, it was a contract, it was a casual contract, so there's no annual leave. It's a bit tricky, and a lot of banks just say, no way, Jose, we're not going to do it. We were able to use his 6 months salary credits from his last job, his new job, put it all together and get his home loan approved.
And this is where you can see there's a little bit of grey here. Not all banks are the same, and working with a mortgage broker like ourselves can help you get in the market sooner, because whilst you might get a no from one lender, another bank might be open and willing to assist. Now, Jaden, talk me through a gap in employment. What are the banks looking at here, and why is this such a big deal?
Yeah, so there are some banks like St. George and Westpac, for example, who are fine if you've just started a new job recently, but they want to see your last 12 months employment history. They want to potentially see that on paper. Sometimes they'll even ask for your last pay slip to show it kind of continued through. Their main issue here is if you have more than a 30-day gap in employment, which is pretty common if you've moved interstate, you're changing locations, it takes a month to sort of turn things around. Or if you quit in December and you might not start till January, there could be a delay there. And that's where some of these banks have a rule where if there's more than a 30-day gap in employment, and NZ does the same actually as well, they can't help. They want to see at least 3 months in that new role. So keep that in mind. There are other banks though, again, that are fine. They just want one pay slip, jog on, have to move on.
Now, the other thing to keep in mind is if you've just started a new role and you haven't actually started and you're in between roles, or even you're still with your old employer and you're starting that new role, you do have to be careful because the bank wants to see you in that new role you've accepted, and usually one pay slip. As Jaden had with Christine's situation, there are circumstances where you can get an exception to work around that. Something to be very careful of. Now, Jaden, when you look at the amount you can borrow, how much can you borrow based on, let's say, 100 grand income? Is there a general rule of thumb that I can work with to understand at a high level what I might be able to borrow?
And this is where the banks look at different types of incomes differently. So if you're PAYG, full-time, part-time, they'll use 100% of your base income. If you get bonuses, overtime, allowances, they'll use between 80 to 100% of that income, depending on your industry. So if you're an essential worker, a doctor, AMBO, that sort of thing, they'll potentially use 100% of that income. But for everyone else, they'll reduce it by 20%. The thing that gets a little bit tricky here is if you're a contractor, if you're casual, sometimes they won't annualize your income. So although you might be working 52 weeks a year, the banks say, well, Nathan, you're casual, you don't actually get annual leave, you don't get sick leave. So instead of us using, your weekly pay times 52 over a year, they'll say, well, they use, 46 or 50 weeks, they'll use a bit less to factor in that annual leave. So keep that in mind. Not all banks, although you get paid the same and you expect them to lend the same amount, will lend you the same amount because of your job.
Especially if you're receiving, let's say, for example, bonus. Some of the lenders actually want to see 2 years consistency of that bonus. If you're earning commission income, a lot of banks will want to see that commission income over a 3 or 6 month period of time. You do need to be careful if you started a role and you've got not many sort of months in the position or the tenure. There will need to be a little bit more time frames if you want to use your allowances, commissions, even bonuses.
We see this pretty commonly with nurses. So you might get your base salary, but you get heaps of sort of overtime. You might work weekends, late hours, you get meal allowances. In that sort of industry, it can be hard if you've just, the beginning of, say, July, the bank will look at the year to date, the last month, and say, well, you haven't earned that much. They'll have to look at what you earned last year. It might not be reflective of your current situation. So again, working with a mortgage broker can look at, well, if you look at your tax return from last year, let's compare it to your pay slip, let's compare it to your allowances and see what's going to work best in your situation to maximize your potential.
And this also goes with part-time. We see a lot of nurses that are part-time. The banks go off the employment contract. So given it part-time, you've got a fairly large range of hours you can earn. The banks will take your base, most conservative hours. So if the contract says you're only going to get 12 hours a week, but you're probably going to get 30, well, unfortunately, until you've been in that role for at least 3 months, we don't have much to go off. The bank will always go off the conservative. So that's one key thing. If you are starting a new role, the banks are always going to look at this very conservatively. And in a lot of cases, there are ways we can get around it. So whilst this might be their ruling, their policy, there's always a way to look outside the box, especially if you have industry experience as a nurse with other organizations, or if you're wanting to find a way to maximize that capacity, getting in touch with a broker like ourselves can help. Now, Jaden, walk me through if you're self-employed and you've just started your business, or you're a self-employed contractor on an ABN. What's that look like if you've just started out? How can you get a loan in this situation?
This does get tricky. If you're just a mortgage broker, for example, you're working for a bank, you go start out on your own. For most regular people that start a brand new business, the banks will want a minimum of 18 to 24 months of trading to be able to consider that self-employed income. And that's because with self-employed income, you don't get the same amount every month. You could get big income, but then you got to cover your expenses like your insurances, your taxes, just the cost of an office. So if you're self-employed, it can be trickier. But if you're like an IT contractor, if you're a doctor, in some sort of specialty roles, engineers is another one where you might have been doing PAYG consulting and contracting for the last 10 years. You could have history of that. Then the same contract company says, well, Nathan, how about you start invoicing us? You put it through a BAS. There are ways around this. Even though you've just started this structure, the banks can consider, we've been able to had a lot of success in the past, using BAS in different ways of using less than 12 months income to use that.
I had a customer that was working in film and television, and it's very common for people in the film and television industry to work on a certain set or a project for a short period of time and then move. His role ranged from being on his own ABN to being a PAYG. The good thing is he'd been doing that for the last 10 years. We could build up a story and show the bank for the last 2 years his income was very consistent, and the bank was able to get comfort around this. So I think the key here is if you've started a new role, the bank's always going to be worried about your longevity, your income over a set period of time. And that's why for self-employed clients, they usually want to see at least 1 year's financials or 2 years in some cases. So once again, working with a broker like ourselves, we can look at your situation and look at ways we can get around that.
The biggest tip I could have here in this section, if you're self-employed, even if you're just starting a new job, is to give as much data possible to your broker or to your bank. So, they'll generally ask for 2 years employment history. Try and include all the jobs you've had in between, show that consistency of income. And even in some cases, if you've got your old notice of assessment, if you've got your old PAYG summaries, which usually link up the dates when you started your jobs and you finished, they can be helpful as well, because it shows, well, Nathan's been working in film and TV for the last 5 years, 10 years. Here's the history of it. Here's the tax returns. It showed my income's been consistently 80,000 for the last 10 years. It gives the bank more confidence because, again, they're assessing you over the next 30 years. So they're not just looking at you today. They're looking at your living expenses, what they might be in the future. They're looking at the interest rates at sort of 8 or 9% when they're assessing it. So they're looking at a pretty conservative picture, and they kind of take your income at a lower amount than you might actually be getting in the future.
So we've looked at full-time, part-time employment. As you can see, you only need one pacer. If you're on a ABN, sometimes that's going to be a little bit more challenging where you'll need 1 year's financials at a bare minimum, or if you have history of doing similar things in the past, there can be exceptions there. Jaden, the last thing I wanted to focus on and talk a little bit more in detail was if you're casual, if you're starting a new casual role, what's some of the things people need to be wary of out there if they're trying to get a new home?
Yeah, so industry experience when you're in casual is really essential. The blanket rule across pretty much all the banks after COVID has been a minimum of 6 months employment in a casual role. And the main reason is the income can go up and down. It can spike, it can be a lot one week and a lot less one week. And even if it's sort of permanent casual, they still want that history.
And it's interesting to see, we've seen the banks really shift. So previously, before COVID, they were willing to take only 3 months in a casual role. They've all sort of shifted to 6 months now. So Jaden, what happens if you don't have 6 months in a role? Can you still get a loan if you're casually employed?
Yeah, there are a couple of workarounds. So if you're new to industry, if you've just graduated uni, you're starting as a film and TV director, it's going to be 6 months casual. There's really no way around that. But if you're like an IT contractor and you're sort of shifting jobs every 6 or 12 months, if we can build up a case and show you've got a minimum of 12 months industry experience, 12 months in a job, some banks will want 2 years history, we can get around that. And like I said earlier, we can use that 6-month salary credit to work around the casual minimum requirements. And there are some other banks that can consider on an exception basis if you've got a strong deposit, if you've got another partner that might be working, you're applying together. 3 months casual. So less than that if you don't have the experience where it can make sense.
And once again, this also helps if you have a larger deposit because the bank sees that as a lower risk and they're more willing to help out. Guys, here at Hunter Galloway, we're a mortgage broker and deal with a lot of clients getting into the market for the first time or even upgrading or downgrading, having just started a new role. Get in touch with us if you need assistance at huntergalloway.com.au or call us on 1-800-088-065 and we'll see you next time.